Hi, it's George Nordhaus, and this is going to be a very big learning experience for everybody looking and listening. We're going to be talking about the agents of the future, the evolution of property and casualty insurance distribution, and what is more important to all of us. This report, and we'll talk to you more about the report by McKinsey and Company, is, in my opinion, one of the most meaningful ones I've seen in many, many years, and it really got my attention. As we go through this part of the program, you'll learn why it got my attention. I will tell you this, that I've got a couple of people who you will know, and they are very, very talented in this business of ours. As a matter of fact, when I wanted people to be with me on this and comment on, I looked all over the country because I pretty well know the consultants and everything else. And I chose these two guys out of all of the choice of people that I had, which was many. And I did that because of a lot of reasons. They both were agents at one point in their time. They had their own organization. They're entrepreneurs. They're extremely successful guys in every way. And they're also very verbal. They don't mind saying what they think. So you may not agree through here. You may get a little edgy, and if you do, we'll perfectly understand that because they tell it like it is. On the bottom there is Roger Sitkins. He began in 1980 as a consultant. He had his agency before that. He became one of the best consultants in the country. He had a partner named Gary Holgate, who most of you don't know, but he was the most effective, between these two guys, the most effective consultants for many years. They established so many things that we are doing in our agencies right now that we don't even know why we did it. It's because they came in and they did it. Roger built something along the way called the vertical growth experience, and that's strategies and sales management, senior management, and all that. And he really did a beautiful job with that. Then at some point he set up the Sitkins 100 and then eventually Sitkins International. That's an exclusive network, high performance agencies. And we don't have time to go into the details of it, but we'll give you Roger's contact information later. Scott Addis is president and CEO of the Addis Group and the Addis Intellectual Capital. That was formed in 1990. It's an insurance brokerage and risk management consulting firm. And the capital, the intellectual capital, is the business of industry transformation. It was the AIC is a coaching and consulting firm which has a business model called the Beyond Insurance, and you're going to hear a lot more about Beyond Insurance as we go forward. You'll hear Beyond Insurance workshops, Beyond Insurance consulting, Organic Growth Network. Incidentally, some years ago, when this was relatively new, I attended one of his first seminars, and I want to tell you this: you should too if you get the opportunity. I learned more about risk management in 3 days than I thought I would ever know in my life. Scott was recognized one of the 25 most innovative agents in America by the National Alliance, that's the CIC and all that group. He was also vice president, incidentally, in addition to having his own agency, which he eventually sold, but he was vice president of Johnson & Higgins, and that's another story. And of course, that's a huge, huge organization. Well, that's the guys here. Let me do this. I did the first part of it, and I suspect that many of you who are listening to this did hear part one. But let me go forward to the tell you what I said very shortly, and then we'll get into the real meat of the program. I just want to lay the groundwork here. You know, there's been a gradual shift in the value that carriers and customers, retail and the small business, place on many activities traditionally performed by local agents. And that's increasingly calling into question the role you, agents, will play in the future. The people are going to find their business much easier than they have before. The agency was the force before, and still is pretty much right now. But the customers are increasingly using multiple communications channels to connect with their carrier. Carriers are interacting more directly with customers, lower cost and often with more convenient and consistent service levels. The once clear division of labor between carrier and agency is diminishing, but agent commission structures remain largely unchanged. Many carriers are now reconsidering how they allocate their distribution budgets, and they're asking a little bit different of their agency force, but we'll get into that later on. Within 5 years, says McKinsey, market forces and technology is going to be changing very, very much. The division of activities between the agency and the carrier just is not going to exist the way it did before. For a number of reasons: greater consistency, lower transaction costs, better capturing of information, and so forth. And technology, well, technology is really the big thing that's really affecting all this. And it's just amazing what's happening there. Is it at the end of the era for a local insurance agency? Well, local agents are not in danger of extinction. You can feel better now, but the role they play, according to McKinsey, is going to continue to evolve. And we all know that anyway. You got to just adapt to a new set of circumstances. I'm not going to preach. I'll let Roger and Scott do that. Carriers got to think about how those changes are going to mean for their business and begin developing big, strong, robust challenges and strategies to make things work. And looking at a little bit of history, most channel came along. People are getting used to their own schedules at all times, and multiple channels to be able to go to the companies or go anywhere and get answers to their questions. And they want a consistent, satisfying experience at every interaction. As a result, the walls between traditional distribution channels are crumbling. This is most obvious in personal auto, and so everybody listening knows that. And that's where McKinsey did a map the customer decision journey, and it revealed the extent to which shoppers jump from one channel to another as they move from information gathering to purchase and beyond. I mean, this little study here, I would suggest once again, when you look at this chart, come back to it later and really study it, because it is really amazing. It shows where people gather information, where they get their quotes from, and then where they purchase. And I don't have to preach on it. You can see exactly what's happening. The question is, how long will that agent be on the right-hand side of that column? And that's one of the things that we're going to be discussing. Well, market forces, technological advances have complicated the arrangement, the division of activities, and we've said it before, and they said it 4 or 5 times in their report, between agency or carrier, excuse me, no longer serves carriers the way it once did. Carriers are making heavy technology investments. They are opening central contact offices. You all know you use service centers and so forth. So they answer all kinds of questions, and some of them haven't been very good, as you well know, but they're going to be better. They want to replicate the feel of an agent's office, more consistency, greater ability, test new approaches, and so forth. And that's going to happen. It's bound to happen, says McKinsey, because as more customer interactions filter through those central contact centers, the opportunities for you to interact with the customer and add value are going to decrease. And that's pretty scary. Here's the best thing I've seen. I mean, look what the internet did to travel agencies. You remember when you used to go to travel agencies? I bet everybody listening used well, I know you did before 2000, 2001, 2003 in there. Then all of a sudden you could go on the internet and get do your own work. And I mean, get your, I don't know, hotel travel, any kind of travel, air and so forth. Go right up to the airline if you want. And wow, did that affect the travel agents? Yes, yes, yes. It knocked the heck out of them. It cut them in half. If you want to really know that, it cut them in half. Can you believe it? But the ones that survived reinvented their business models. They shifted towards travel and specialization, operational efficiency, technology, and they survived. So this is the big basis of the report that our friends from McKinsey did. So I'm going to start with our friends here and ask them. Scott, why don't you start it? What's your overall reaction to the McKinsey report's findings and the assumptions?
Well, George, I'd like to begin by thanking you and thanking me for giving me the opportunity of joining Roger today. But I'd like to say the McKinsey report in many ways is very much on target, but I do have to go back in time and say that, you know, I am that local insurance agency that started in 1990. I'm that guy that maybe they were thinking could potentially be extinct. I'm the guy whose goals and dreams were to be banished. But today, here we are. I am living in 2 capacities, one still running an agency, although bank-owned, yes, a local agency, that is now a top 60 broker in the United States and also doing coaching and consulting. But here's the piece that I think McKinsey, as much as I respect them, may have underestimated and that is the resolve and capabilities of the local agent. And I'm going to point out three things about the local agent. Number one, they're entrepreneurial, they're proud, and they're courageous. Number two, they have very, very deep roots in their communities, and they know how to develop intimate relationships. But most importantly, these local agencies have garnered the trust and respect of those whom they serve. So I deal with these guys all over the country today as now a coach and a mentor, and I can tell you that if they just do three modest things, it's amazing how they really can expand and grow in tremendous ways. Number one, repackage, reposition, and develop a unique process focused on intimacy and the customer experience. You think about any great organization today, no matter how large they are, every few years, what do? They repackage, they reposition, and then they're out in the marketplace again. The obvious issue we're talking about is commoditization, and hardest hit, as you said a few moments ago, is the auto insurance followed by homeowners and small commercial. But for those listening today, I know in my heart's heart that commoditization creates a huge, huge opportunity for those that are able to stand out in a crowded marketplace.
I never thought of it that way. Maybe we can talk a little bit further about that. That's very good. Boy, that's a shocker because people hate commoditization. They're nervous about it. At any rate, that's a good analogy. How about you, Roger?
Well, thank you also for being on, and Scott, thanks for those words there, because I agree with you. I think the biggest overall thing that jumped out at me on this is that the role of the agent has to continue to change, to evolve, transform, whatever word we want to use. I think the traditional agent out there is still going to do okay, and it's a great business. It's a great business to make a lot of money and create impact in your community, but it's a traditional approach, and traditional approach is just that we're going to help you purchase your insurance, we'll place it with a carrier, and we'll give you reactive service. And they do a good job there. But the problem is if you're traditional, you're like everyone else, you haven't repackaged, as Scott mentioned, then you have a ton of competition. And I really want people to move into more of a non-traditional approach. And non-traditional says, yes, we'll do a great job of purchase and placement, and we'll have a lot of great carriers we work with, and yes, we'll give you great service. But now on the non-traditional approach, what we're going to do is we're going to be much more about risk and getting away from commoditization. It's about dealing with emerging risk and understanding that there's strategic risk, hazard risk, and business risk, and how do you deal with those things and differentiate from your competition. And I think finally one of the overriding early conclusions was that you've got to become professionally managed, professionally run, not just an entrepreneur that's order taking, but somebody, I think our friend Gary Holgate was the first one that said, a lot of people started out selling insurance and then wound up running a business. And it is truly about having a business and continuing to grow it. So I think there's tremendous opportunities pointed out by this report. And I think the ones that react will do well, and the ones that won't, they're going to be challenged.
Well, I think you're exactly right. I tell you what, let's do. Let's go forward in that, and let's talk about the thing. Here was the implications for agency principles that they said, and it's just exactly what you're saying, Roger. Develop new strengths and capabilities and a value proposition that's compelling both to carriers and consumers. No single model is going to guarantee success in the market, but several are going to emerge over time, and we're going to be talking about some of those operating models and see how you like it. And the likelihood is that a number of agencies will decline, but those that remain will become stronger, I hope. So we hope that's the way it is. Okay, they came out with 3 core capabilities of agents, and I think they're very interesting. Let me touch on them, and then I'll have you guys comment on them. They said the agencies simply have to do this for survival. 1, defining and reaching a target market. And they said that you got to go beyond the local market paradigm. And it says you got to get bigger and I mean, spread out, because there's only so much business in the local market, and there are not going to be too many of those just local agents around. And that was kind of an interesting one. So bigger area, broader view of the marketplace. You got to have a clear articulation of the segments that they want and the associated product offerings. What segment are we going after? We have to define and reach that. And the third point that they made there was to reach those markets, traditional local marketing tactics are going to no longer be sufficient. Now, you know what those are, in the yellow pages and all that stuff that we've talked about before, but and seen before that nobody's doing anymore. Agents are going to need to increase their digital presence, more flexible how they communicate, video, Twitter, Facebook, more and more effective ways to get in front of potential customers, including affinity group relationships. So, what do you think, guys? You agree with those 3 points? Roger, go ahead.
I agree with the points to a degree. Certainly, everyone's going to be different, but clearly they've got to define a better marketplace. If everybody in your marketplace is a potential client, then you're pretty scattered. But when the agents start doing two things, number one, identifying what an ideal client looks like for them and specifically targeting them, then they're in a lot better shape. And secondly, when they start specializing, general practitioners always make less money than specialists. Turning it around, specialists always make more money than general practitioners in any professional services company. So knowing your ideal clients, becoming much more of a specialist, and then absolutely the use of digital communication. It's unbelievable. Some of the applications we're seeing out there where the producers can go out and on their iPad or iPhone, they can do a risk survey directly tied into their agency automation system. It's pretty exciting.
Well, that is, and that's amazing. Scott, what's your thoughts on this?
Well, George, I certainly agree with McKinsey's assertion that agencies will benefit from a target market approach supported by expertise and an expanded geographical presence and knowing how to communicate with customers. But I really believe there's a survival skill that is much more basic and powerful that needs to occur even before thinking about target marketing, and that's producer and agency transformation. In many ways, it's a new mindset. You might say, well, what are you getting at? When you say producer and agency transformation mindset? And I absolutely know to survive and thrive in an increasingly commoditized world, the agency leaders must teach their people how to add value. And it's becoming so apparent if we see through the eyes of the head of household and the CFO and the CEO and the HR director, these people are juggling like never before. Their responsibilities are crazy, and many of you listening today are in that camp, and you know what I'm talking about, how much pressure you have on you. So these individuals, whoever they may be, don't have two things. They don't have the time and in many cases the ability to identify the issues facing their business or family. So the agency leadership must move beyond insurance to the world of risk mitigation. They must see themselves not as agents or brokers, but something new and fresh and clean and exciting, and that is a risk strategist 365 days a year. Today's game is about risk. It's not about insurance. It's about getting inside the business. It's getting inside the family unit to consult, diagnose, and treat. So to sum it up, I think it's a diagnostic approach to risk identification and mitigation coupled with the experience, including intimacy, that's going to be the 1-2 punch that can take organizations wherever they want. But you must get that foundation there first before you can go target market.
I like that terminology too, risk strategist. I hadn't heard that. I know we'll get to it probably some more in a minute, but and of course that's one of your things. But that's a neat. What are you? I'm a risk strategist for the agency. Wow, that's impressive. Now, agents are going to need expertise, said the people. Excuse me. They have to have easy access, so much information, and I guess that's what you guys are saying. Customers are unwilling to pay for generalist advice. That's kind of a neat way of putting it. The broader retail market is also has expectation for more personalized products, and it's kind of what you guys are saying. Well, it translates into a demand for more deep expertise, and that's again what you said from the insurance advisors. They're going to turn for agents for advice on holistic insurance packages for their personal needs, and I think that's a very important statement. And for industry-tailored advice on small commercial policies. Anybody want to comment on that in any way?
Well, I'd be glad to, George. I think you're absolutely right. We have to have expertise, but the question is how do we teach and motivate our people to get inside the business or inside the family to really understand what keeps them awake at night? The key question is going to be, not only how the business is run, what the issues are faced, but really what keeps them up at night, the ability to go ahead and to identify, prioritize, measure, and ultimately help the client mitigate risk.
All right. Roger, I don't hear you, so I don't guess you have a comment on that one. Here's operational efficiency and scale. They say agents are going to need to do more with less. I think that's pretty obvious. Technology, we all talked about that, and we know it's coming more and more and more. Now, this is interesting to me. Agencies can grow bigger themselves, and that's something I want you to both comment on, if you will, or virtually by banding together with other small agencies or by outsourcing certain functions to carriers or third-party providers. And what in a way, the banding with other agents, of course, is the aggregators, the aggregations, the clusters. How do you two feel about that option? Roger?
George, I think, well, first of all, the comment that agents have to do more with less, absolutely. When we look at the average agents out there and we're doing analysis and helping them with their planning, we see that they're really stuck in certain areas where they simply have way too many clients that are paying them way too little money each. because they're not targeting the right ones. Our studies continue to show, and people may not agree with this, and I just say challenge them, go back and look at your own agency. But we see when you're doing the true 80-20 analysis of an agency and then look at what the bottom 50% of the clients do for them, in the average agency, the bottom 50% of the clients are less than 10% of the revenue, and they create a loss for the agency. So they've got to start looking at writing fewer clients that are paying them more money each. They certainly have to look at the number of carriers that they operate with. It's amazing, some of the studies I've seen lately there. And then from a efficiency perspective, they've got to do everything they can to drive one of the most important critical indicators for an agency, revenue per employee. How are we going to do that? Now, for some of the smaller agencies, they may have to band together. And certainly there are some great aggregators out there. You know, we have friends that have 2,000, 3,000, 4,000 agencies in their network that have banded together that are really helping them not only survive but thrive. But agencies absolutely have to have growth. If you don't have growth, you're going backwards. And our whole thing of vertical growth is that there are 4 types of growth that agencies go through: negative, flat, horizontal, and vertical. And the ones that are just stuck doing the same thing they've always done are just going to limp along. They'll do okay, but again, they won't do great, and they won't ever, Scott says, transform to this new type of agency, and then they're going to have a real hard time with perpetuation.
I think you're right. That's the old. It brings up the old statement: if you always do what you always did, you'll always get what you always got, and that doesn't work anymore. It just doesn't work anymore. Scott, what do you think about this?
George, if I could expand upon what Roger said and
Yeah.
maybe get into both operational efficiency and also aggregators.
Sure.
You know, if you think about operational efficiency and scale, I think it really comes from knowing who you are, who you serve, what you bring to the marketplace, what your capabilities are, and what they aren't. And I'll just use the Addis Group as a model. Since founding in 1990, our per-employee revenue is ever near at $300,000.
Wow.
And, you know, many members of this network I put together called the Beyond Insurance Global Network are also there. Yes, technology increases efficiency. However, I think it's a dedication to the customer experience coupled with a unique process, a prospect criteria filter, which drives efficiency. You know, you think about it as the experience of an organization drives retention. Energized clients drive referrals. Referrals drive hit ratio. Hit ratios breeds confidence, and confidence creates energy and passion. A comment on aggregators. I knew little about them a few years ago, but today Beyond Insurance is proud to work with 4 aggregators: Combined Agents of America, Georgia Agency Partners, Shared Agency Services, the Iroquois Group. While market access and profit sharing are obvious reasons to cluster, I can tell you each of those organizations is now keenly focused on resources and capabilities in other areas to foster growth, profit, and agency value. I think, George, you also know about 5 years ago, I formed the Beyond Insurance Global Network. Today it's an exclusive group of 32 and growing enlightened agencies across the U.S. who have banded together to share, innovate, and challenge. They do have a lot of the Beyond Insurance capabilities, but I think it's that the way they're innovating and sharing which really is taking them to a whole other level.
Yeah, that sounds like Sitkins too, the same kind of thing. But you know, we had a good Monday morning on clusters. Our aggregators by Bruce Cochran of Renaissance Group, and if you want to see it, you can go back to YouTube. I'll tell you about that later on. But that was really a good one, and we're going to have another one too about another kind. So I really believe that the clusters. I don't want to call them clusters because they're really not aggregators, aggregations. Well, what you described, and of course I know all those guys that you talked about, and there's some really good ones in there. Okay, let's see. We're going to talk about the agents are not positioned. This is a big one. To succeed in a world where scale and operational efficiency, marketing tactics, and deep products expertise are critical. Several new agency models, though, are already finding success. This is according now back to McKinsey. And they came out with the fact that there are 6 different operational models of what the agency is going to look like, and they don't say 5 years or 10 years or anything like that, but they say that this is the trend. And so what I'd like to do is to have you comment on those, and I'd appreciate it. So the agency models of the future, number 1 was commercial lines agencies. Some winning models look different from others. Others will completely redefine what it means to be an agency. Comment either, Roger?
Well, the traditional agency, again, if they're just like everybody else, then they have a ton of competition. And when you look at risk, as Scott's mentioned and I've mentioned, it's the people that are going to differentiate by saying, you know what, insurance is one of the solutions we provide. Clearly, it's not the only solution we provide. We deal with risk. And if they can get away from just being traditional like everybody else, we kid around that the average traditional agency out there has a unique way of selling. It's called the old way. And the old way is look, copy, quote, and pray. You know, look at your policies, copy them, quote them, pray I've got a price you like, pray you return my call. And then it's just, that's where they hear you guys are all the same. Well, they've got to differentiate. So a traditional model doing the right thing of efficiencies, et cetera, as we've both mentioned, certainly are going to do well, but they do have to redefine where they're going in that model.
Good. Scott?
George, I suggest there's no perfect picture agency model of the future. You think about it, we're entrepreneurs. One might tweak here and one might tweak there, and what the outcome might be very different. But I'd rather like to focus on 5 characteristics that I think must be present, whatever model one has. Number 1, servant leadership. Understanding our job in agencies is a passion to serve the customer, their staff, the community, and the carrier partners. Number 2, innovation. They must be able to innovate. I think that's what Roger's getting at. You must be able to go ahead and differentiate yourself in the marketplace. Number 3, a unique process. Number 4, every waking day of focus on the customer experience with a keen focus on how do we stay intimate and connected with the customer. And last but not least, the ability to get inside the business, inside the family unit to identify, measure, prioritize, and mitigate risk.
So we will have traditional commercial lines agencies still, but they'll be operating as you said.
I think that they have the characteristics. Certainly, those characteristics I think give them a different look and feel, and but I certainly think they can remain successful.
All right. What about traditional commercial lines agencies? They suggest that. Excuse me. Well, this is one of the agency models of the future. Large and these agencies will have industry-focused producers, larger accounts too. Would you go for that too? They'll have formalized teams, small commercial accounts. How about that? Are there teams that leverage automation to drive down costs? Anybody? Scott?
Absolutely. I mean, I think certainly the more sophisticated, the more focused one can get, it helps in all areas. So I certainly agree with that assertion.
Yeah. Roger, anything?
Well, absolutely. Again, it comes back to the specialized producer versus the general practitioner. As far as industry-focused producers, you know, you want to deal with an expert. When I had prostate cancer 5 years ago, and by the way, guys, make sure you know your number, I didn't want somebody who had never done one of those operations before. I wanted a guy who had done 852. Not that I knew, but I did research. Secondly, you know, this whole thing on small commercial, absolutely. For years, I've been kind of branded as a guy that said, agencies lose money in small commercial, you can't make a profit at it. Well, the first part of the statement is true. They do lose money, the average agency in small commercial. But the second part is not true. You can make a profit if you put together specialized teams. There has to be a small commercial unit in an agency of any size in order to leverage the automation, again, drive down costs, but more importantly, sell a lot of that business because there's a lot of growth there. But if you mix large and small together like traditional agencies do, they have a real problem then.
Good. What about multi-line agencies? Now we're talking about a well-balanced product mix. Personal, commercial, life, product focused and all that, the point of sale, cross-selling and so forth. Do you see that being one of the remaining people in all this stress? Scott?
Absolutely. My gosh, the deeper you build that relationship and understand the customer, the opportunities are amazing. You go back to what Roger's saying, you take that small business client as an example. When you really get on the inside, there's so many risk issues facing them that get into not only their health insurance and the property casualty, get into the financial services. You look at that, what appears to be a smallish property casualty account, and you go ahead and look at doing everything from homeowners to financial services and the commercial and the health. That is a very, very nice lucrative account.
Good. Roger, do you have anything on this one?
Oh, absolutely. The personal lines can be a huge, huge profit center, especially when they start doing the VIP personal lines, platinum personal lines, whatever they're calling it. But we all know many times the personal lines account is larger than the commercial account on some of the entrepreneurs you deal with. And just having a balance and having, like Scott said, deep and wide, we believe that one of the biggest problems in the average agency out there is they have a whole bunch of part-time clients. They write some of their coverage, not all their coverage. And so we say, you can't have part-time clients. If you're going to have a client, make it a full-time client and do everything for them and help them deal with risk across their whole their whole business model, their whole personal model, et cetera.
Okay, good. All right, the third one was agencies with leverage or lower cost models. And what they're getting at here is where the local market can't support a traditional agency model. Rural areas and all that sort of thing, a lower cost model could evolve. And it's shared. Once again, you talk about your aggregator comes in there, managing general agent models and all that sort of thing. They are saying that this model can take a variety of approaches, driving down operational costs, maximizing access to market customers, and so forth. Hub and spoke, co-locating a small agency storefront in a popular retail outlet. Do you see that happening? Roger, what about you?
Well, I don't really like the idea of selling insurance at a place where you get your auto registration and it looks like you buy a sub sandwich also. I don't think that's the professional one we want to deal with. But certainly they've got to do everything they can to drive down their costs. The agencies that are out there in some of the smaller areas and they have the lower premiums, obviously lower commission income, they've got to do everything they can to say, look, we still have to grow this business. We still have to manage our costs. We have to turn a profit. We have to create more value for ourselves. So they have to look at other operations or opportunities.
Scott?
Exactly, but I think the thing they can never forget is no matter if they're trying to drive down their operational costs, they can never lose focus on what is that experience they're delivering, and most importantly, in today's commoditized world, how do they stay intimate with a customer? If they lose intimacy, they don't have a unique experience, they can't progress in the future.
Good, like that. The fourth one is the teams approach, specialized agents. Partner to have multi-line solutions and unique product expertise and so forth. They provide each other with leads, but could also combine the formal sales teams that share clients and so forth. Now, they say that this model does exist informally in property and casualty, but it's more prevalent in other advisory services. Roger? Any comment on?
Well, what we see, they're saying you see it in wealth management all the time. I think it's just one more solution to look at. They had got the various models here, the 5 models, I think it is.
Yeah, 6, yeah.
Yeah, or 6, excuse me. There's no cookie cutter that works for everybody. You have to take a look at what your opportunities are and what it means to you, not short term, but long term. And then as Scott said, and then ultimately, how does what I'm doing help my client? What's their experience? Am I doing the right things for them?
Right, good. Scott?
George, as I saw this and read this, I was thinking more of a law firm model, and there's 2 types of law firms to be simplistic. You have the smallest local firm that's going to be very intimate and hand-holding and so forth, yet you might have to at some point consider a larger firm that has specialization. So to me it's the evolution of saying to what degree does it become something where you need to be successful, you have to have specialization, but certainly both can thrive, but certainly a specialization in services and resources to handle certain capabilities is very important.
Good. Okay. Then they have the small niche expertise-driven agencies, and they have value propositions at a small number of customer segments across the personal, small, commercial, and more specific advice, tailored products, and so forth. They say that this structure will be cost will be low because virtual limited footprint. They'll maintain few carrier relationships, focusing on brands that resonate with their target segments. Anybody?
I'd love to comment on this, George. It's interesting. About 3 years ago, I started studying the financial services piece for called the life, disability, and related areas. And it's interesting. You see a lot of very, very successful people in that business who, for example, are after the high or ultra-high net worth individuals and have very few carrier relationships. So the model can be very strong. I think it's a little bit more challenging in the property casualty field, but I can say that I've seen that done very successfully in the financial services field, especially life, disability, and financial planning.
Right. Roger.
Well, absolutely. And I don't know that small is necessarily the proper word here, but certainly niche-driven, niche-driven if you're our Canadian clients and friends. And they're great people, by the way.
Yeah, they are.
The expertise-driven, one of the very best agencies we deal with has 5 classes of business they write, and that's it. That's all they do. And they're, like Scott mentioned, they're the 300,000 plus of revenue per employee, driven by expertise and being known in that customer segment.
Boy, that's really high average. I hear that occasionally, and I just flip when I hear it. When you say somebody's got 300,000 average income per employee, wake up, people, because that's one heck of an agency. They're doing a lot of things right. Okay, the last one is the small virtual agency. Now, this one is just almost like a low overhead, hardly maybe working out of the home or something like that, remote interactions, pretty much like, a lot of these look like the ones that you just saw each time, but they say that, what you were saying right there, Roger, high net worth individuals, no physical location, all employees work remotely. I talked to an agency I work with, this agency, not on Agencies Online because it's awfully small. It's a one-person agency, but he does very well, I think, and he has about $1.5 million premium volume. He operates his basic square feet. Are you ready for this, guys? For his agency is 60 feet, 60 square feet. Why? He works out of his, I don't know, his bedroom or somewhere along the way. I never thought that would be happening, but I guess it does. Any thought on these kind of people? Scott?
Well, I mean, I think it goes back to what we said before. No matter what size, shape, or position in the marketplace, you must go ahead and have some kind of a means to stay close to the customer, be intimate. Intimacy is a lost art, and also have some kind of a unique process or expertise.
Right. Anything, Roger?
Well, absolutely. When you look at the use of technology to drive down costs and allow employees to work remotely, the generation now, a lot of them like to work remote. The vast majority of employees at Sitkins work remote. I know that like 90% of the coaching that I do with our clients, our members, it's a video chat. And many times I'm sitting at my vacation home or my home in Fort Myers, Florida, or the office, but the video chat creates that intimacy too. So I think it's a great model for the right people. Again, nothing's for everyone.
I think you're right, and it obviously is changing. Well, it's the whole thing that they were trying to show is that they think there's going to be a shrinking of the agency force, and of course that's the big thing. That's the scary thing. One implication, they say, just some people are going to make it and some are not going to make it. The overall number of agents is going down, they say, by 10%. You see a lot of numbers and all that, but that's like one-person agencies that come in on and so forth. If those pools shrink, without offsetting growth in other lines of business, decline in the number of agents is likely to accelerate. Now, I'm not preaching death, but I am preaching what McKinsey said. You think they're right? I think they're right, don't you? You guys, anybody?
I would agree with that.
Yeah, I would too. Roger?
Well, yeah, the commission pool is not growing tremendously.
Yeah.
And there's just going to be fewer ones. So
yeah.
I think the ones that are going to survive are just going to have to get tougher and going to have to change their business model.
I think so. I think you're right too about that.
I think from the carrier's perspective, they've got to focus their energy and attention on those that they see have a business plan, have growth strategies, and really know what they're doing. And the reality is, if an agency cannot demonstrate those capabilities, they're going to be in for a tough go.
Well, that's what they were saying too. The insurers are going to have to operate in a more complex distribution landscape, and we kind of know about that. The investment's got to be balanced because they got heavy advertising, direct channels, and so forth. And I kind of question how much advertising an agency can do now. Can they compete with the Geicos of the world? And I feel, well, I won't get into that now. Pressure on commissions, you just said that. On the level of commissions they pay to agencies, carriers are going to need to consider rewarding agencies more directly for those efforts that uniquely add value. Retention, cross-selling. Roger, what do you think?
Well, I think just number one on the use of the contact centers, service centers, whatever they may be, the carriers are doing some great job, some certainly pretty good job with that, but the agents are not necessarily changing their business model when they put a client in there. I've had conversations with the heads of two of the major service centers in the P&C business, and it was very interesting to me. I asked them what their number one challenge was, and because they know how I deal with agents every day, they said it's getting the agents to change once they put customers with us. One told me the number was 52%, the other one said 54% of incoming calls to the service center were agency CSRs calling on behalf of the client. So they move the client there but still deal with it.
God.
It just doesn't make any sense to me. If you're going to go to the service center, go to the service center. The carriers, everyone I've talked to, have shared with me that their retention is higher on business in their service center than with the agency. Now, not a true picture because the agency maybe, when the company loses it, the agency may have moved it to another marketplace. But certainly there's going to be pressure on the commission levels. If an agency is simply a pass-through middleman, they take risk from the client, they pass it through to the insurance company, and they get paid a commission for that, and that's all they do, well, those are the ones that are going to be challenged, the ones that are value-added, and I almost hate that term because it's become a cliche, but the ones that can add value to the transaction, the ones that can help clients deal with risk, the ones that can make the risk more attractive to the insurance marketplace, the ones that have the attitude I mentioned earlier that insurance is one of the solutions we provide, not the only one, then they'll be paid more. And certainly, the two last points are retention and cross-selling. Well, obviously, two of the most important things: retention. What percent of our clients are we retaining, both for the carrier and the agent, and cross-selling. How are we driving revenue per relationship? I think it's all crucial.
I do too. So that's for sure. Well, as we talk about the shrinking of the agency force, that's what they're saying. They continue to eat away at that money, and the amount available to pay agents as commission as they spend more money is going to be, of course, we've already talked about that. Here's why: insurers will have to operate a complete more complex distribution landscape. Investments we talked about, pressure on the level of commissions they pay. Consider rewarding agencies, what we talked about, as that's what we just talked about. Then the shrinking of the agency force. Not all agencies are going to survive, and that's really what we're getting to. For carriers, it shouldn't be a spectator sport. They got to begin positioning themselves now for success. So let's talk about the carriers. The evolution of the agency channel is a challenge. It's an opportunity, but it's a heck of a challenge. So we got some questions for carrier leadership at a starting point, and let's ask those questions now, if we can, and see how you guys feel about it. Which of our current and target policyholder segments value agencies? That's very interesting. I think they're going to have to take that granular approach to the thing. Deeper understanding of which segments find value in their interactions keeps them loyal to the channel, how their preferences are changing. Scott?
It's interesting. In crude terms, let's call the carrier the manufacturer and agents and brokers distributors, and look at models in any other kind of business. In so many other businesses, you have the manufacturer and the distributor. I'm honored to do coaching and training for a number of carriers, including Cincinnati, Chubb, CNA, Hanover, Selective, and I can see their commitment to the agents and brokers. Bringing in Beyond Insurance program is just one example of what they're doing, but these people every waking day are saying, how do we make our distributors more successful? How do we give back and so forth? But the unfortunate thing is they must go ahead and pick and choose who those carriers are, who those partners are going to be, much like any manufacturer said who are going to be their top distributors. So those agents and brokers have to start working and saying, look, we have to go ahead and position ourselves where we are going to be a key member of that distribution channel.
Yeah. Roger?
I agree. The 80-20 rule works in the industry very much so. That if you look at the average carrier, they truly are getting somewhere in that 80% level of their distribution from 20% of their agents. So those are the ones they're going to partner with. They're going to find ways to provide more programs. They're going to outsource things to companies like Scott and myself, and they're just going to do the things that help the better ones change. And that's why so many of the carriers continue to develop their partnership level agents, where they're doing more for them because they have to find ways to get more distribution from their manufacturer's rep, if you will.
I think that's a very good point. All the things that you guys are saying are just going to be affecting for companies, and I kind of wonder whether a lot of companies go to this extent. Another question is, how can they add value to those target segments? What unique services can they offer in the future? What do they need to excel? Our friends from McKinsey said that they got to have agencies got to carve out that new. That's what you guys are saying. New value proposition makes sense in the new multi-channel. What can they do more effectively and efficiently? How are they going to reach target customer segments with other channels or sales approaches? How will the various channels coordinate in a way? Roger, you got any ideas about that?
Well, Scott mentioned Hanover. It's a company that his firm and mine both deal with, and they've done a tremendous job in their small commercial portal, where there are tools to help an agency go out there and identify the appetite of the carrier and how it matches with the agency, and then all of their supporting materials are about adding more value just beyond the mere risk transfer mechanism. So I think the carriers again are going to partner, and they're going to say, we're going to help you drive more value. One of the challenges in the agency business overall is you deal with two things. You deal with tools and you deal with behaviors. The tools, we always say, are the responsibility of the agency and the carriers they represent. What tools can you bring us to help us differentiate? But the behaviors are still the responsibility of that producer out there in front of the client, the service person dealing with the client. What behaviors do we have to do? So if agencies will understand that we can bring tools, but we still have to manage behaviors, and they tie all this together with great carrier relationships, then they outperform the marketplace.
Good point. Scott.
There must be an enhanced alignment between the carrier and the agents and brokers. Much like in a marriage, marriages aren't perfect. You have to work at it all the time and understand what are the strengths. The agent or broker must, for every carrier they represent, truly understand what are the unique characteristics of that carrier, what are the resources they can bring, what makes them unique in the marketplace, as well as the carrier, for every agency they represent, must go through a process of discovery. What are the strengths of that organization? What are the capabilities that they must have? What are some of the issues facing them? And together realize we need each other in a huge, huge way. If we go ahead and say carriers go off on their distribution strategy, the agents and brokers do it, and we don't marry each other, and I think as Roger has said so well, is the business today is about how do we mitigate risk. We must realize that is a big, big challenge. As you might know, last week it came out with something called the risk revolution. It is saying we together as an industry must challenge commoditization. We must bring down the dominance of the insurance bid. If we aren't realizing we must be aligned, we're missing the whole boat.
What's the name of that again, please, Scott?
The term is risk revolution, and very simply, it's a challenge to the industry to tackle commoditization, especially the dominance of the insurance bid.
Yeah, I like that. I'll publicize that as much as I can. Maybe we can do a Monday morning on it one of these days, I hope, huh? Okay. Let's see now. How are we doing here on carriers, the value proposition? We talked about that. Now, how's those various channels coordinate in a way that's addictive to agencies? Well, we've kind of covered that. Let's go to another one here. What's our current agencies positioned? What agency segments should we support? Does the overall agency network need to change? These are questions now. Remember that companies need to be asking themselves, according to McKinsey. How are we going to understand more deeply the agent's business? How do they understand? I kind of wonder whether many companies, and I'm not beating on them, but do they really understand our business? Do they talk about what you guys have just talked about, income per employee, all those things that you both teach? Do our current agencies give us access to the right customer segments and industries? Anyone?
I think agency company planning is one of the things that, I have a real hard time with. When agencies have their companies come in and plan, the average visit is, all right, we need another $500,000 from you this year. Okay, we'll give it to you. Great meeting. See you later. And there's no way of helping them. It's just numbers thrown out there. I was doing a project on agency company planning a few years ago, and I was interviewing one of our clients who used to be a regional VP for a national carrier. And he told me, he said, agency planning is a joke coming out of the box. We knew we would be wrong. And I said, what? And he said, oh yeah, we knew that because we were told we could never come back with numbers that were lower than what they previously had. We always had to show growth in our plans. Well, the more I interviewed carriers, what I found out was the percent of agencies that actually hit their plan with the carriers is really low. Even at the partnership level, it's less than 50%. It was quite frankly closer to 40%. So they come in and do planning that's just about numbers, but it's not about succession. It's not about helping you grow, et cetera. And yet we see some of the carriers out there that are going in and just doing phenomenal reviews with their agencies, understanding their book of business. Hanover's got a great product they do on that, or a great program called the Book of Business Optimizer, where they really understand what's really happening on the book and how can we help you grow. And they look for revenue opportunities. So I think if the planning is just give me a $500,000, okay, versus let's find out what's going on. How can we grow? Here's our appetite. How does that match up against your targets? What producers can we work with to specialize? How do we help you in small commercial? What do we do in VIP personal lines? And then there's ongoing communication. And I think to comment back with some of the things Scott talked about. It is the alignment. It's the carriers only have so much resource, and they're going to go to those agents that are going to provide the most effective distribution at very high closing ratios.
Well, that's good. I like that. Hope companies will listen to that. Scott?
You know, it's interesting. Just a fun story. There was an agency in Los Angeles area a few years ago that says, Scott, I know you've got a great relation with Hanover, and this is not a Hanover commercial, but a very interesting story, because I think in many ways, as Roger said, they are setting the bar for how deep they want to go in understanding the agents and brokers that they represent. But anyhow, the guy said to me, Scott, can you help with Hanover? And I made the calls, and they came in there, and he called me back about a month later and said, Scott, there's a challenge. You know, they're really trying to go very, very deep with us. Maybe they're making us feel uncomfortable getting so much information. And I guess there's two ways to look at it. You know, one way is to say, isn't that unbelievable that they want to know so much about you so they can truly be a business partner? And the other way is to say, are they really getting too close to us? So I think that's a decision that we have to make, and I certainly would side on the Hanover side and say, if we're going to be true business partners, we must go ahead and know each other that intently. There's going to be a lot of warts on the carrier side, warts on the agent or broker side, but that's part of life, saying, okay, how do we work together efficiently and to benefit the customer ultimately?
Do you see, do either of you see companies hiring or utilizing their present staff to really, really understand these agency problems and ideals? You think
the problem is people are so busy today. That's part of the challenge. Is the agency principals and the leadership teams there, as carriers are so busy. But I would say, I think as Roger said, we're coming to the point now where you have to invest in a very select few, and the agents brokers must position themselves to say, I am best in class to the carrier.
Yeah. Okay. Sorry, how do we fill the gaps where existing agencies are able to adapt? Is there anything on that one? How do they fill them? That's a question. Well, let's go to the next question because it kind of follows. How do we work with our agencies to support them? What tools, systems, capabilities, and so forth are we going to have? What agency management techniques, and that's what we're just talking about. How do we maintain our current flow of new business while we're doing all those other things? How do we have a performance culture that drives agencies to produce? This is really what you guys are just talking about, I think. How can we foster and support distribution? Insurers can't be bystanders anymore in the evolution of the agency channel. And I think that's where we're heading on this. Any additional thoughts on that, or have we covered it?
Well, I think the key phrase there is they can't be bystanders. They've got to partner with the right agents, and agents have got to partner with the right carriers. You know, there's always the question, how many carriers should we have? Nobody has the magic wand or the crystal ball there. But I would just look at it and say, if I don't have a partner relationship with a carrier, and I'm just doing some one-off things, I mentioned earlier that some of the numbers we've seen, the number of carriers that agencies have, it's unbelievable. We see agencies in that $3 to $4 million revenue range. They're shocked when they look at the number of carriers they have on their insurance company payable list. It's over 100. And now people go, that's not me. Well, go back and look. We see agencies in that, these are premium volumes now, 10 to 25 million of premium. That's 77 commercial carriers. Are you kidding me? Now, a lot of them are surplus lines, we understand, but take a look at it because there's tremendous lost opportunity for increased compensation, increased profit sharing, et cetera. But it's got to be a partnership. If the insurers are just standing by and hoping it works, it doesn't. So the bystander to me is, not be a bystander is a key word there.
Well, I felt I've watched over the years the companies marketing, helping their agents market and providing co-op advertising and all that sort of thing. And of course, that all kind of dropped, kind of coming back now. But in the process of that, once again, this is just my opinion, the companies have got to have some people in there who really understand what marketing is all about, not just somebody who says, here's money, here's half the page for your Yellow Page, here's half the money for your Yellow Page ad or something like that. So I see just what you're talking about. Scott?
Well, I certainly agree and don't have anything to add at that point.
Well, that's interesting. Okay, we're just about the end now. We can reward agencies, says they, with value-added service and still remain competitive on price. These are, again, what McKinsey says the companies have got to ask. And here's what the shaking shook me up. They can't afford to continue paying agencies for activities they, being the carriers, are performing themselves. And they'll need to take a hard look at commissions. Do you think they're going to be doing that?
Well, I mean, you think about there's three indicators. It's growth, it's profitability, and it's retention. And I've always looked at the Addis Group model, measure that. We can say, okay, what is our historical total loss ratio? What's our loss ratio by carrier? What's our growth and so forth? What's our retention? So if you can actually demonstrate as an agency that those indicators are strong, great things can happen in that carrier relationship.
Yeah. Roger, you want to comment on it?
Well, from a business model, the carriers have to take a hard look at this. And if I were a traditional agency not willing to change, I'd have some fear, believe me. But when you do the right things, the compensation is going to be there if you do the right things. And if you partner up, you'll be fine.
Yeah, well, good point. All right. How should we monitor and stay abreast of the challenge of direct distribution in homeowners, small commercial? How do we, what role do we play on the commoditization? Scott, brings you back. And what change do we make for our marketing messages, underlining and sales capabilities? These are big, big, big important questions that I'm sure companies deal with all the time. But Scott?
I think all we can ask as agents or brokers is to have the carriers be very open and direct with us. Today, for example, and I would say I was unaware of all the activities of some major carriers and what their plans might be, but all we can do is say, if we are valued partners, we may not want to hear it, but please let us know what their distribution strategy is. There's some that remain absolutely totally pure. You look, for example, at Cincinnati, they remain as pure as can be. Others, for example, may be looking at a lot of different distribution, but I just think we have to understand what is their plan, what is their strategy, and communicate effectively, especially with the auto, homeowners, and small commercial.
Yeah. Roger, any points?
Well, yeah, I agree. The Cincinnatis of the world, the auto owners of the world, where they have an absolute commitment to the direct independent agent. All right, in other words, they're going to be dealing with the independents, and so I just think we have to really partner up again. And then this whole slowing of the commoditization is absolutely, if agents continue to sell on price only and live by the sword, die by the sword. We all know that 100-year-old saying. But you just got to say, what do we do to bring more value? How do we tie in with the carriers and value they can do? And again, it's homeowners and auto, and are you really bundling? I'm still amazed at the personal lines level that over 60% of the customers are single policy customers with agencies, that they're not rounding them up. They're not bundling to save money. So they're just not doing the right things all too often.
Great. Well, here's their conclusions, guys. This was good. I'm glad you said what you wanted. Their conclusions were fundamental changes in how customers shop and purchase insurance. And we already know that. Altering the distribution landscape in personal and small commercial. That's just what you said. They say the pressure on the economics of the agency model are going to force them to think or rethink how they distribute their products. And I think that's going to happen a lot more now. Insurers got to develop a thoughtful perspective on which agency models will emerge. And that's exactly what you're saying. They have to have that clear strategic plan. So what I would like to do is to ask you two, Roger, maybe you can start us. Give us an overall conclusion of this McKinsey report, will you?
Well, first of all, I'm glad you brought it to all of our attention, because I had not seen it until you saw it and talked to me about it. So I appreciate being part of this, because there is a big challenge. There is a transformation going on. I think if agencies keep just thinking price, 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 and they don't think coverage, they don't think risk, they're in trouble. There's a great saying we've been pushing with our agencies we work with and producers, that E&O has nothing to do with the size of the risk. You know, a small account can still have a big E&O claim. You owe it to the client to do a great job of helping them deal with risk overall. You look at the travel agencies and see what's happened to them. The best ones were no longer just order taking and selling tickets. They became navigators, getting people navigated through the complexity of a big trip they might be going on. And to me, the agents that are truly transforming, they're becoming, whether they're I think Scott said risk architects or whatever it was. And in our case, we have our risk reduction approach and the risk advisors, but it's about dealing with risk. It's about providing a value proposition that your competition's not doing. You know, what's your unique selling proposition? What are the unique and appealing things you do different than your competition? And so I think it's about transforming. I think it's about absolutely specializing. Again, specialists always make more money than general practitioners. And I think it's really about dealing with the things that help you as an agency owner understand that, you know what, eventually you're going to leave your business. Everybody eventually does. And so it's about perpetuation also. So I think taking a look at those things and understanding that eventually I have to perpetuate my business. This is a great business I'm in, but when I have perpetuation, there's two types, financial and leadership. So if they can deal with all of those issues, it's a great business, but don't sit on the sideline and watch others take care of it. You know, grab a hold of your agency and make something different happen.
Very good. Scott, what's your overall conclusion?
You know, George, it's interesting. If I could tell a cute story, as I was reading the McKinsey report, I was thinking about 10 years ago this September, my wife Bobby and I are flying from Philadelphia to Las Vegas to accept the National Underwriter Agency of the Year Award. And she looks over and she says, Scott, I know you're going to speak to 2,000 or so people. What are you going to say? What's your message? And I said, Bobby, I have 1 minute. I'm not going to say anything. I'm just going to thank the Addis Group, thank our clients, thank the carriers. She said, Scott, you've got to say something brilliant. And I said, what can I say in 1 minute? And she challenged me, and somehow on that ride I was thinking about the word price, and really thinking price, but a different kind of price. And I stood up in front of this group and I said, we've got to realize we have to deliver a different kind of price. A P that stands for process, a unique process, an R for deep, long-standing relationships, an I for intellectual capital, a C for creativity, and an E, energy to serve the clients. A different kind of price, process, relationship, intellectual capital, creativity, and lastly, energy to serve the customer.
Very good. And my own conclusions were that this is, I think, the most meaningful research that I've seen for our business from an objective source. Remember that McKinsey is one of the biggest management consultant firms. They do 3/4 of the Fortune 1000 companies, for example, and they use researchers. They didn't use agents. They didn't use company people. They didn't use consultants. They didn't use Scott. They didn't use Roger. But they did it from an objective basis, so I think at least it gives us a look that we might not have had otherwise. I had determined that, like it or not, commission changes are going to continue to take place. I hadn't thought about that very much lately. I did at one time, but it hasn't. They said the walls between distribution channels are crumbling, and that got my attention. They said commoditization is a fact of life. And Scott has his ideas on that, and we'll hear more about that down the line. But they're dealing with the commoditization. They understand it. They said McKinsey said the insurers will take over many of our duties. That phones and other devices will have all the information we could ever need to access. In other words, you don't have to the CPC or the CLU or whatever it may be in the future. Well, it's always going to be important and nice to have. All that basic information is going to be available about any kind of a risk or whatever. And Roger alluded to that along the way. It's going to be available to any agent. So it's more than just knowledge of what's in the product and so forth. The travel agency strategy really, really got my attention, and I loved it because I've suffered it, as you have, over the ways, and we saw what happened to them. And I just think that they said, and that we didn't say it very well ourselves from the standpoint that the most exciting times are still ahead, and we have to look at it that way. Well, I would like to suggest that if you would like to talk to Roger, you can contact him here, and it'll be here. You can come back to it at any time, and we'd be happy that you did that. And then and Roger has Facebook and all that sort of thing. We're going to follow him. Roger, I got one more thing I guess I have to follow you on, darn it, but there you are. I'll do it. Scott, you can contact him at any time at that number. Both of these gentlemen have really good staffs. I've been working with them lately because they really worked hard, both of them, at this presentation. And I'm really pleased that there was such great cooperation with us doing it. I would like to end by suggesting this, that you can go back to the email that came with this, and I'm going to have a link there to the entire McKinsey approach. You'll have a link right there on it. So if you want to see the whole thing, I would suggest that it's kind of long to print, but you could. And of course, McKinsey has printed if you want to ask them. But you can see it all, everything we talked about, and we really covered it in depth. I can tell you that. But go get it and pass it around to every person in your agency. That's what I would do. I tell you can link to this and this presentation on YouTube anytime. We have a link right there. If you want to go back to YouTube, you can go to YouTube anytime and go. If you go to AgenciesOnline, you'll find that there's so many videos and everything else we've been doing over the years that's kind of hard to find. So if you just go to YouTube and right up at top, George Nordhaus, I'm not trying to toot my own horn, but if you go there, you'll see all of these Monday mornings in order. And you'll see this one there, and it'll be good for you to have. You can go in there anytime. You, again, might send a lot of your staff in there because there's something for almost everybody in the agency. There are always two things in there. There's Insurance Community Center has its quiz flash, and it's a link right there, and we do that all the time. It's very good, 4 or 5 questions each week, and it's kind of challenging and it's fun. And then, of course, there's the tip of the week, the Errors and Omissions tip of the week, and you can always get that there too. Gentlemen, I would like to thank you again for the great job you did, the work that you put in, obviously, and I think this will eventually end up being a how-to manual to run and change your agency. So, Scott, thank you. Roger, thank you.
Thank you, Roger.
My pleasure.
Thank you,
yeah, thank you guys all, and we'll look forward to hearing any of your comments at any time from any of the 3 of us. Okay?